What if I told you that while you're watching Netflix, crypto whales are quietly loading up their bags with HBAR at this critical price, betting on a move that could send this altcoin flying past $1.80? Yeah, you heard that right. We're talking a massive gain, and it all hinges on one single Hedera Hashgraph catalyst, the long-awaited HBAR ETF filing. This is Crypto Apple, and today we're diving deep into the biggest price prediction that could impact your crypto portfolio. This is a must-watch for every HBAR holder. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. Welcome back to Crypto Apple, where we decode the chaos of the cryptocurrency market and serve you the hottest takes with a side of reality. Today we're diving deep into Hedera Hashgraph and its HBAR token, a coin that's been through more ups and downs than a yo-yo in the hands of a hyperactive kid. Its price, currently at around 26 cents, is 55% down from its all-time high. It looks like that one friend who peaked in high school, but here's the kicker. Major institutional players like Google, IBM, and Boeing are backing this tech. A massive financial institution just used its network for a tokenized asset trade. And now not one, but two HBAR ETF filings are on the table with the SEC. Stick around because I'm about to reveal why one analyst thinks this setup could trigger the most explosive price action we've seen in any altcoin this cycle. Plus, I'll share my brutally honest opinion on whether these price predictions are genius or just pure hopium. And by the end of this video, you'll understand exactly how to position your portfolio for what's coming next. But what if I told you the single biggest risk to this entire HBAR thesis isn't the market, it's not the regulators, it's the very technology that makes Hedera so revolutionary. Let's start with where HBAR stands right now. And folks, it's not pretty if you're a bag holder from the previous cycle. This altcoin recently flirted with 30 cents before getting absolutely demolished and falling back to the 24 cents to 26 cent support zone. It's like watching someone confidently walk up to ask their crush out, only to trip over their own shoelaces and faceplant into rejection. But here's where it gets interesting. While many retail investors are panicking, crying into their ramen noodles, the crypto whales are doing what they do best, buying when everyone else is selling. On-chain data confirms it's a stealth accumulation phase. Over the last month, we've seen over $46 million in HBAR moved off exchanges and into cold storage. The whales are buying the dip while you're watching the price tick down. They're betting that the price floor is in. This 24 cents to 26 cent support level has become the new battleground. It's holding stronger than my commitment to my New Year's resolutions. This price zone is attracting serious money, and there's a good reason for that, which has nothing to do with charts. It has to do with the fact that these players believe a fundamental shift is coming. The question is, are they early or are they just plain wrong? But here's where it gets complicated. What if all this whale activity isn't about a long-term bull run, but a calculated play for a short-term pump-and-dump event? What if the institutional money is already in, and it's too late for us? We'll tackle that head-on in a few minutes. Now, let's talk about the elephant in the room, the Hedera ETF filings. Nasdaq has officially submitted paperwork with the SEC for not one, but two separate Hedera ETFs, one from Canary Capital and another from Grayscale. This is a monumental moment. It's like finding out your favorite underground rock band just got signed to a major record label. Exciting, but also terrifying that it might change everything. Bloomberg analysts are throwing around a 90% probability of approval by the end of the year. 90%. That's higher than my confidence level when I tell people I understand how blockchain actually works. If these ETFs get approved, we're not just talking about institutional money flowing into HBAR. We're talking about a complete paradigm shift for altcoin investing. It would mean that a stamp of approval from the US government has been placed on the underlying tech of Hedera Hashgraph. It would open the floodgates for retirement funds, pension plans, and institutional money that couldn't touch crypto before. But let's pump the brakes for a hot second. Remember when everyone was convinced multiple Bitcoin ETFs would launch simultaneously? Yeah, that took years longer than anyone predicted. The crypto space has a habit of getting ahead of itself faster than a teenager with their first credit card. The SEC is a beast that moves slower than dial-up internet. They have already delayed the decision on the Canary ETF to September 9, 2025. But here's where things get worse. The real reason the SEC is hesitant isn't about the volatility of HBAR. It's about a deeply technical, almost forgotten part of the Hedera network that could be a regulatory nightmare. I'll reveal what it is and why it could completely derail this ETF train later. Before we dive deeper into the fundamentals and that mind-blowing price prediction, smash that like button if you're finding value in this breakdown and subscribe to Crypto Apple. You don't want to miss what's coming next because these price targets are absolutely bonkers. A technical analyst who's been right more often than a broken clock has identified what they call a bullish flag pattern between 22 cents and 24 cents. In trader speak, this means HBAR is coiling up like a spring, ready to either explode upward or completely collapse. There's no middle ground in crypto, folks. The analysis suggests that if this support holds, we could see HBAR breakout toward the 1.414 Fibonacci extension target of $1.80. Now, for those who don't speak technical analysis, Fibonacci levels are like astrology for traders. Half the people swear by them, the other half think they're complete nonsense, but everyone pays attention when they line up with other market signals. We're also seeing a powerful Adam and Eve pattern that analyst eGrag Crypto has been highlighting, suggesting a strong bottom has been put in. Let me be crystal clear about my opinion here. While these technical patterns can be useful, they're about as reliable as a weather forecast. Sure, they might be right, but they can also be completely wrong when market sentiment shifts or when macro factors come into play. But there's something else, a much more powerful signal. The real secret to BAR's success isn't in the charts or the news headlines. It's in the code itself. I'll explain the one technical feature of Hedera that a multi-trillion-dollar industry is currently building on, right now, completely in the dark. Here's where HBAR actually gets interesting beyond just price speculation. The partnerships with Google, IBM, and Boeing aren't just for marketing. These are real integrations with real utility. Hedera Hashgraph's distributed ledger technology is being used for actual enterprise solutions, not just some DeFi yield farming scheme that will disappear faster than free pizza at a college event. Just days ago, we got news that Lloyds Bank and investment firm Hedera successfully used Hedera for a tokenized FX trade. This is a monumental step forward for real-world assets, RWAs. If a major bank is willing to use this network for a real money transaction, what does that tell you about its security and its future? The potential integration with SWIFT for cross-border payments is particularly intriguing. If Hedera can crack that nut, we're talking about revolutionizing how international money moves. It would make slow, expensive transfers a thing of the past, like a fax machine in a world of email. But, and this is a big but, the very feature that makes Hedera so attractive to enterprises, its permissioned governing council, is the exact reason it could be seen as a centralizing weakness by the rest of the crypto community. Could this be the final hurdle that prevents it from truly becoming a decentralized, global network? My honest take? The technology behind Hedera is solid, the partnerships are real, but the crypto market doesn't always reward fundamentals in the short term. Sometimes the best projects languish while meme coins featuring cartoon dogs reach billion-dollar valuations. It's a weird world we live in. Now, let's talk about the elephant no one wants to talk about, tokenomics. You might hear about other crypto projects having massive token unlocks that flood the market and crash the price. But with HBAR, the story is completely different. The Hedera team and council have been methodically managing the token release schedule. We've seen consistent outflows of HBAR from exchanges, totaling over $46 million last month. This signals strong demand and a decreasing supply on the market. This isn't random. It's a calculated strategic move that sets the stage for a dramatic price reaction when a major catalyst, like that ETF, finally hits. It's like a massive rubber band being pulled back, building tension. The longer it's held, the more explosive the release will be. The question is, when will the tension be released? But here's where things get worse. The market has a memory, and it remembers what happened to HBAR during the last bull run. The price didn't just rise, it crashed hard. Many investors got burned. I'll reveal the one key difference between the last cycle and this one that could change everything for your investment. So where does that leave us? We've seen the charts, we've discussed the whales, and we've uncovered the ticking ETF time bomb. But the real story isn't about any of that. The real story is about Hedera, the technology, and the vision. Imagine a world where everything you own, from your house to your stocks, to the carbon credits for your company, is a token on a digital ledger. Now imagine that ledger is so fast, so secure, and so trusted that the biggest companies on the planet not only use it but govern it. That's the promise of Hedera Hashgraph. While other projects are still struggling with theoretical scalability, Hedera is already building the future. The partnerships aren't just talk, they're the foundation of a new digital economy. The ETF isn't just a price pump, it's the regulatory on-ramp that unlocks trillions of dollars of capital. The whales aren't just speculators, they're smart money positioning themselves for this exact moment. The price prediction of $1.80 isn't a fantasy, it's the mathematical result of a collision between real-world utility and massive market demand. The future of the digital economy isn't on a slow, expensive blockchain. It's on a fast, efficient, and trusted network. It's on Hedera. There you have it, the complete breakdown of BAR's potential journey to $1.80 and beyond. Whether you're bullish, bearish, or just plain confused, remember this: successful crypto investing requires patience, research, and a healthy dose of skepticism. This isn't about gambling. It's about understanding the fundamentals and positioning yourself for the future. The ETF may be delayed, but the work being done on the Hedera Hashgraph network is not. The institutions are already here.